Look, this is not your average top 3 mistakes home buyers make video. Okay, today I'm gonna give you the cold hard truth that no one else is in this post-pandemic real estate market. And this isn't your average Molina Monday either. Today I'm bringing you, for the first time ever, Molina Monday money tips. Let's roll. Number 1 mistake home buyers make. Number 1, not understanding the market. Right now, there are 1.3 million homes for sale in the United States, and over 10 million people are looking for a home. What that means is almost every home you make an offer on will have 10 other offers. You have to understand the market and move fast. Between 2012 to 2021, 12.3 million households were created in the United States, but only 7 million housing units were built. So there's a housing shortage of about 5.3 million homes. But when you subtract the 2021 single-family housing starts of 1.1 million and then add back in the number of units that have actually been completed, the shortage is still around 4.4 million housing units. But why is that shortage good for you? Because based on basic supply and demand economics, if you understand the market and you buy a home, your home will appreciate for years to come, because we are nowhere near close to catching up on the supply shortage. And if you think you're just gonna wait it out and wait for the crash, just know the median credit score in 2020 and 2021 exceeds 800. Out of the 1.6 million people still in forbearance, 98% have over 10% equity. 25% to 50% of everyone in forbearance could sell their home between now and the end of the year, and it would be eaten up by demand. If you don't understand the market, you will sit on the sidelines and you'll continue renting only to find out that rent has gone up 14% across the nation and is going to keep going up next year. Number 2, not taking the time to get fully approved. If you understand the market, you know you're competing against well-qualified borrowers and cash deals. The closing time frame you offer will have to be a lot faster than normal. If you wait to get approved until you're already under contract on a home, even if you feel like you're well qualified, you're still under a time frame like the financing contingency, and you're feeling the pressure of a deadline. It's not the best time to go searching for your W-2s or pay stubs or tax returns or bank statements or income-based repayment student loan documentation. You're gonna want to get yourself prepared ahead of time with the reputable mortgage lender in your area that has fully pre-underwritten your financials, your situation, and has gone over a couple of mortgage scenarios with you so that you're prepared for the payment, the down payment, and you've anticipated scenarios for the future, like how long you're gonna own this house for, if it's gonna be a future investment, etc. Number 3, falling into the pit of common do's and don'ts. Ladies and gentlemen, communication is everything. If you can avoid these pitfalls, you will dramatically reduce the turbulence of buying a home. Do not switch from W-2 to 1099. Okay, don't leave your salaried position for a commission-only job. You need 2 years commission to qualify. Tell your lender about any employment changes. Trust me, you do not want the lender to find out on their own. Do not max out your credit cards. If your balances are maxed out and your credit is re-ran prior to closing, your score could drop. And having a lower credit score prior to closing means you'll have to go back into underwriting. And it could also affect your interest rate pricing. Also, no large deposits. Any deposit that exceeds 50% of your gross monthly income has to be sourced. And if it can't be sourced, it has to be backed out. If the large deposit is cash that has not been seasoned, which means it's been sitting in a bank account for over 60 days, it has to be backed out as well. Your bank statements are analyzed in underwriting throughout the entire process up until you're clear to close. Don't co-sign for anyone for anything, okay? You co-sign for your nephew's new apartment before closing, or you get a new car or credit card. That has to be added into your debt to income ratio, and you have to go back into underwriting. Ladies and gentlemen, these are the top 3 mistakes that I see home buyers make. If you want your clients to avoid these mistakes, or you want to avoid these mistakes yourself, give me a call anytime, 561-801-0260. Go out there, don't forget to kick ass, and have an amazing Molina Monday. Molina out.